Hey Forex Fortune Hunters, Tom Wilmot, welcome aboard. In this video, we're going to follow up on the material we posted a couple days ago in a new template called New Combo. I've actually changed the name of that to Zeeline Hot. You can see it right here. And it includes the Zeelander Flytrap Signal line that we talked about in our book more than 5 years ago. And it includes also the crossover of the 6 and 12 EMA. In this particular chart, we're looking at the US dollar versus the Japanese yen on a 1-hour basis. And you can see over the last 3 days, we've had some significant volatility. We had a round trip trade here over the course of several days. And I'm recording this today on Thursday, which is the 19th of August, 2021. And so this basically dates back to last Friday's sell-off in the yen. So without further ado, let me just say we're going to talk more about this template. We're going to specifically focus in on where you want to enter your trades, what time frames you might likely use, and also what are your stop losses. As an added feature, we've added the stochastic here set to 833, and I'm going to talk a little bit about when you can use the stochastic to your advantage to confirm your trade entries. So, if you like it, hold on to your hat, and we'll get started right after this. Okay, friends, as I mentioned, we recorded about this new template a 3 days ago, and I'll leave a link to that video in the description below here for sure to let you focus in on that. We're not going to spend too much time on the moving averages and the indicators that are here, but suffice to say we have the Zeelander Signal line, and you can see here on the 1-hour chart we had a lot of chop, which was back on this day, which was the 13th of August, and the 13th of August was last Friday. Okay, so in advance of this steep decline, and you can see that the signal line really worked out pretty well here. This arrow means that the moving average has continued through the signal line, confirming the downward motion, and so as a result of that, you can either get in at this level right here, or you can wait for a little pullback to continue your trade entry strategies. And let me open this up a little bit so you can see what that looks like. Basically, the situation is as follows. If you can't even close above the 6 EMA, well, you're doomed, and off you go to the downside. If you can sometimes close just above it, as we did here at the beginning of the session on Monday, and then continue to be rejected. You see this candle rejection here, as well as a close lower in the second, third hour of the trading session. Then you're on your way down, and we picked this level out as being kind of a level where we had some chop going through the Monday session. So let's get rid of that because it's irrelevant anymore. You can see here that once we crossed over the other important indicator used here, that this is the T3 Tilson created by Tom Tilson back around the year 2000, late 90s, and it is a smooth moving average. And notice that when we have our changeover here and we have the loop below the Zeelander up signal line, that's when we're going to be in a position to begin to think about a reversal in the trade situation. Now on a 1-hour chart, you can see that that took a whole day to really get going before you had this big up move at the beginning, probably, let's see what time it was, 1500. So this was about the 8 o'clock hour, and obviously could have related to some fundamental announcements related to inflation or lack of inflation or the upcoming Fed minutes and so forth. But in any event, we had this big move, we had a bit of a pullback, and then what you see here is another one of our continuation signals. close below the 12. Remember when we couldn't get above the 6 except very briefly, that's a continuation signal. Here was another one into the session, but look at this one. Here we did take out the 12. We closed below it with 3 hours of selling, and then we had a rapid smash bang up above the 6, and that's our signal that the trend is still intact. Now, the reason I added the stochastic here was to give you an idea. You want to be careful here on the downward thrust when the blue stochastic is below the signaling line here, or the longer term moving average, because you're above the T3 Tilson. You've had your nice move on the Zeelander. You've moved up, so you want to be careful. Obviously, you could back off, but where you want to watch for the crossovers is in conjunction with or synchronized with where you are in the overall structure of the chart. Now, here we have stacked moving averages, and so when that happens and you get this crossover, that's another signal that maybe things are ready to pop. Let me move this over again so you can see how that combines. Notice here we had a move above the 45, 55 bands. We also had this crossover of the stochastic, and so you can see here was our move to the north. And until you were to, from stop loss perspective, until you took this out, that would be the only proof that your trade strategy was broken and needed to be exited. Once again, we had here moving into the next day. This is today. We had this, early in the session, we had another pullback in the Japanese yen. 2 hours of selling into the close to match what was happening on Wall Street and the stock market, where we had a wicked sell-off into the close. And now we have this kind of doji candle and then a gradual reversing, and say here what once again was our upward facing candle. And so this candle right here with a close above the 6 is our indication that we may fly higher. So those are a few of the ways that you can help yourself with this particular template. Once again, if you would like any of the indicators listed here, you're welcome to follow another link down below the description and get some free Metatrader indicators. I was unable to do that on my website because WordPress didn't like the extensions for Metatrader, but I have created a Dropbox file, and you're welcome to shoot me an email, and I'll send you an invitation to download any of those indicators that you need free of charge, and we do not spam anybody on email. Okay, I hope that's helpful to you. And let's just keep watching. Notice also that we have this situation here where if you have this kind of a move downward, maybe you want to wait for the pullback. You could also drop down to a little lower time frame and see if you get the continuation signals on that time frame. And notice here, that's a perfect kind of a move. You can even make your risk match even better with your potential reward, because here a close above the T3 Tilson and or the signal line, which could be a legitimate stop area, is only 9 pips versus the 87 or 75 or whatever it was to the bottom of this trend as it broke down on last Friday. Okay, guys. Thanks for watching. Don't hesitate to subscribe. Hit the bell if you need an alert to new material. And once again, thanks for watching.